Good afternoon, gents. Hope you're doing well, guys. Hey, James. Hey, Matthew. Good afternoon, guys. All right. Before I... Thanks, mate. Yep. Well done. Well done. All right, team. So, um, in essence, it's been a little bit more of a rocky start today than it was yesterday. It was nice enjoying a win in the European session. Not something that has been done for for a while, I don't think, to the point where I just kind of gave up with the European Opens just for their lack of momentum. We did actually get some decent breakouts this morning. Look, to be fair, we really did. It was quite nice, actually. First thing this morning, having this big sell-off. And then I was expecting a little bit of a buyback to take place, and we just haven't had it. Now, I only had one attempt at this trade idea today, and that was exactly when I released it and then called it out into the lounge this morning. But unfortunately, we did come down. We got taken out, and that was that. We then had several other break of structure elements that all came back up. Well, not all. These three came back up to this point here, which was my represented TRF to the trade. And it did indeed actually use that as the liquidity block. So then the markets come all the way back down again to test out the big area down here. Now, I'm not going to be short the DAX at all because of this area. It doesn't make any sense at all. But yeah, it's just not got much steam behind it. Currently, our stocks, especially the European ones, have sold off pretty big. Down 1.1% for the EU50, down 1% for the DAX. UK FTSE at the moment is still remaining relatively buoyant, but it did have one hell of a sell-off. Look at this move here from 9 o'clock, really big sell-off, and then we've just ranged for the entire day so far from that point. The Japanese Nikkei is down 1.2%, which I guess it shouldn't really surprise many of us, but yeah, really nice big sell-off there as well. And then the American markets are really on the back foot here because we're only looking at a maximum of the Dow Jones loss at minus 0.56% as it currently stands, and the NAS 100's minus 0.4. So the US markets at the moment very much sort of behind our European stocks. It will be interesting to see this afternoon if the US actually plays catch up with Europe and we see these stocks sell off significantly as well. Now, if we go back up here to our 15-minute time frames to gain a bit of a bigger picture of things, if we do break through these points of liquidity, which, let's be fair, guys, they're not that far away from where we're trading at the moment. These are very close to where we are, so we don't have to really wait around too long. We get a breakout underneath this area, we do have a really long way to fall. The major point of liquidity, I would say, well, the major point of liquidity is obviously down at around 57. I don't think that's going to be done today. But we certainly could see levels like 58.10 and possibly 57.80 for the Standard & Poor's. For the NAS 100 here, we could easily see here at around 20k, I think. I mean, that's quite a big move, but I think we could probably see 20k. It's not something that I would take an active position against either. I wouldn't just take one position. I'm not feeling that optimistic about the markets at the moment. I say that yesterday worked out really well for us, and bloody hell, I mean, we did over 2% gain yesterday, which was fantastic, but that's because of us being adapting to the different market dynamics and not looking for such long moves from a visual perspective, I suppose you could say. Time duration of our active positions has been reduced, and so therefore we're in and out of the market at a faster pace, and it led to increased wins. It led to increased gains yesterday. So I want to carry on that approach for the fund. There's nothing I want to change about that. I am going to be going for the more modest targets than the more the adventurous ones. For the NAS 100 this afternoon, I guess at this stage we might as well just carry out our analysis of the US stock markets first, and then we can start to break down the rest of them. But at this stage, this is our sort of major inflection point for the low, the current series of lows that we have been forming. We're currently trading at 2047.30. We have this point here being the area that we could potentially buy from, or we have this area as the area that we could also sell from if it has a break, close, and a retest below it. So I will not be looking for a break of structure below this point. It is way too significant in the market. We've seen the institutional buying power come back in here. I mean, bottom line, from this low to this high, the market bounced off that level 1.63%. So we know that institutional buying interest is here naturally. Now, we need a margin to work with, right? So do we want to go for that margin up there? Personally, this is a 15-minute time frame. That's a whopping margin. So I don't really want to take a trade idea to up there from down here. I think what I would be much more comfortable with doing is actually bringing this down and having this area as the area where I would utilize for a TP. So what my plan of attack for this afternoon is going to be is either looking for the push from this area in here back up to there as one trade idea, or looking for a 1 minute break of structure point, which I can already see on the 15 here. So I'll list that for you guys, and that's going to be there as a break of structure point for a short down to here. Now the TRF is it's sitting directly at the 50% point of those trading margins, and that's at the two lows of this move. But I think upon the breakout, we do not need to fear these lows too much. And I would be putting much more weight in this area and this area for the trade, for the asset price to sort of, travel through. So we cannot execute this trade now, even though it looks like it's triggering. These are only upon the breakout at 2:30 this afternoon. Okay, so that's the NAS 100. Now for the short, you have this in here, okay, and that's a potential short target. Now the margin to trade between there and there is less so than here. Well, I don't know. Actually, it's probably a little bit less, just a little bit. Now the break of structure and the break, close, and retest, more specifically here, will be under this level. So then we will be looking for the break, close, retest, and then the continuation. So this trade idea probably won't yield huge risk reward. You're probably going to be looking at around a 1 to 2. Yeah, something like that. So I would say probably a 1 to 2 at the bottom there, and possibly something a little bit more adventurous between these margins and your ability to utilize that. The break of structure point for the long could even be as low as there. I mean, that could, based on what we've got here, this could be what we're looking for. So if that's the case, we're going to be able to see some pretty decent risk reward ratio coming out of the NAS 100 this afternoon. Maybe a 1 to 1, maybe a 1 to 3. It just depends where the price action ends up and looking at those break of structure points, of course, but it does look like the long probably has a lot more to give than the short. So in terms of the Dow Jones then this afternoon, we yesterday had, actually it wasn't yesterday at all, was it? It was last week. Yeah, we had this massive climb, and it does look like we're kind of traversing to the downside here. So this area is a big one, right? So if we go back in time here, that is a major inflection point. We can see this because price action has traveled up into this area and then down to this area in here. So we've got this rebound. We've got a 15-minute break, close, and retest, which has just taken place as well. This looks good. It looks like it's priming for a continued short right now, but we cannot look at trading it yet. Okay, so really nice intraday setup. All we need right now is a break of structure underneath there, and frankly, you're good to go for an intraday trade. But I don't want to be taking this until the bell rings this afternoon, because anything can happen then. So my point of call for this one is going to be a TP of that area in there. That's where I'm going to be looking today. So that then makes this our trading margin, and that is quite decent, guys. Look at the size of that trading margin. That is good enough. So what I'm going to be utilizing now is a 1 minute chart, because I'm going to be looking for the most recent anchor point in the move to generate the short for us. Right, so just to give you an example, I'll be looking for the price action to move down it will probably come back to retest, and it will start on its way. Now, when this happens, all I'm utilizing here is the most recent anchor point, and that's going to be the breaker structure entry that I'm looking for. So if that is where the most recent anchor point is, that's going to be my entry. But if the market shoots down here, well, look at it, it already is, right? If the market shoots down here and then comes back up and then continues to trade lower upon the session breakout that we're looking at this afternoon, then I'm ultimately going to be using this as my breaker structure point for my entry. Okay? And the whole thing changes. But don't forget that if this low does happen, you are still going to have a wonderful risk-reward ratio available to you to trade this with little in terms of risk to the position. So you're probably going to be using maybe a 1 to 3. That's what I should imagine for this afternoon's Dow Jones. And so don't panic, don't fear that the market is going away without you, because wherever it goes from now until 2:30, there will be a decent anchor point for you to utilize as an entry point for this setup, because of the nature of the size of the margin that we have here today. Okay, so if we go back in time here, just to give you a bit of a more detailed picture, this is the margin that we had to utilize. Now, from this point down here at around 42.77 up to this margin here, or this level here at around 43.226, we have a wonderfully clear path of least resistance. We have also a TRF, as we usually do, and the TRF is situated at around 43 to 43.023. So let's go right the way across to the bottom. That's where we are at the moment. So that TRF, 43 to 4023. And that's going to be right and around this area and around here. Okay? And that is just a TRF. It's nothing more. Now, other things to appreciate. Since I've come on the session, we've actually lost another 0.2 to 0.25 on the asset values for the NAS 100 and the US 30 Dow Jones. And the S&P as well, for that matter. So the markets are bearish. They are looking as though they are probably going to be selling off throughout the day today. That being taken into consideration here, by the time the market has reached this area, this area in here, we would have lost another 0.17% on the asset value. So then we're looking at minus 0.85%. By the time we come down to here, it's going to be 0.44 on top of that. So then we're looking at over a 1% loss day, which again is absolutely fine, but just take that into consideration. You know, if the market comes down to, let's say, this area down here, and then pulls back up to this area and then continues going, we're not going to be utilizing that as a breaker structure entry point, because there just isn't the margin left in the tank to trade. I think you guys understand that. I think you know that. So don't think I'm sort of teaching you how to suck eggs, but it's just on the chance that you possibly consider it. I just feel more comfortable me saying that if we get down to around 42,975, let's call it a day and walk away. And then we'll probably be looking more so at the buyback opportunity that can come from the low, because that is also going to be on the cards. Looking at the price action coming down, and then looking at the rally back from this major point of liquidity here. We might not see the buyback all the way up to 43.12, but in the nature of what I've been speaking about with the market dynamics and the volatility index, real low levels, I'm probably going to be utilizing this area, if that is where the anchor point is at the time, as my target profit, or maybe even the median at around 43. Let's say we take the median into account. We've got the 43 level to 43.023, which is that zone there. Maybe this then becomes that trade. So then we look at a rejection, the breaker structure point, the target profit, and of course our stop loss for a 1 to 2 on the buyback. And that's how I would go around trading the US 30 Dow Jones today. All right. And so is that clear, guys? Just to be absolutely certain. Oh, good afternoon, everyone else as well. Hey, Nadia. Good afternoon, Ian, and good afternoon, Scotty. So it's a little bit of a different setup today, because we're not really heavily reliant upon previous price action, okay? So we're kind of more speculating. We're looking at speculative analysis at where things could be and being able to action those rather than looking at direct, previous price. The reason being is not because the previous price action isn't there, because frankly it is, but it's just too old now. We're on a 1 minute time frame here. The chances that those smaller, more intricate 1 minute levels are still going to be utilized because of pending or limit orders in the market, very, very, very slim chances. What I'm looking at is where the path of least resistance lies, and the US 30 Dow Jones, for the shorts at least today, has a really nice POLR. So that's what we're going to be focusing our attention on. Okay, right. So in terms of everything else that was going on in the markets yesterday, we did do pretty well. I've already cleared down the charts. Obviously, I sent all of the trade results into the same room as the trade signals were from yesterday. I will carry out that exact same process again today as well. Look at that NAS 100. That's really going for it now. It's looking nice. So let's just, copy image. Just going to get this going whilst we're doing this in real time, because I think that worked out quite well for you guys yesterday to have that. So that's one. Dow Jones. I must say, just on reflecting here about the analysis we've just done, I am much, much more of a fan of the Dow Jones than I am the NAS 100 today. Much more. It just looks so much cleaner. So I'd probably be putting a little bit more emphasis behind that one than I would the NAS 100. So yesterday then, starting from the top, we did end up taking a hit in the natural gas asset. We did not, unfortunately, manage to fill the gap. We got down pretty far. I would say, 50%, but there wasn't even that far into the trade that we took because the break of structure came so low. So it was almost an immediate execution and immediate loss followed. It hasn't really done too much from that point. We're at 0.83% up at the moment, hovering around that 0.8 to 0.9, let's say. It does show percentage change quickly because of the nature of the asset, trading at low prices, but it's not really done too much. We've not really seen too much movement here. There isn't necessarily a bearish bias yet. This is still a bullish market, so I'm not really going to try and take a second stab at another short again here. The chances of that are very, very slim. Now, what you can do is you can utilize the all-time high strategy that we utilize, taking a break, close, and retest, followed up with a fixed 1-to-2 risk-reward ratio trade. There's no reason why you cannot do that. And at this level, it does kind of make sense. So what you'd be doing is waiting for the break, close, and retest, breaker structure being formed, and then you just knock out a fixed 1-to-2 risk-reward ratio trade idea, regardless of whatever that looks like. So the stop is wherever you want the stop loss to be, and then you're looking at double the return. So that's going to be there, just as an example. And you can use that. I would not count this as a retest of anything major, so you will need a fresh retest on top of this most recently generated anchor point in order to take the fixed 1-to-2. So that's that. In terms of me firing out a dedicated trading option for this one, I'm going to avoid it. I'm going to give it a miss at this time. There's been a lot of pretty significant gaps recently in natural gas. We haven't filled any of them. We did end up making a nice high out of yesterday's price action from the low, but it's just been a bit too snail's pace. And when we've got up there, we've come all the way back down from this point and ended up ranging because we're not even trading higher than the week's open at the moment. It's just been kind of sideways. So nothing to be really shouting home about there. Looking at UK Brent, we took a win in this one yesterday, and that was really nice. We captured the win in this move up here. So that was good to see. In terms of the breaker structure point for this one, we are looking at the breakout of this area. We are trading directly underneath it, as you can all see nice and clear. It's going to be a break, close, and a retest of this one as well. Now, when we get it back inside this trading margin, we are, in essence, breaking back inside a trading range that oil was in for some time. We've had the odd and occasional breakout. Possibly you could even see this as the range median, right? So if you have this down here, then you can see that actually possibly this is the established range, and this is just the upper half, and the median's been utilized a lot more significantly than possibly other ranges would do. But regardless of that, no matter what we do, this is requiring a break close and a retest, okay? Not just a break of structure. So if you don't want to sit around and wait for the retest, I can confidently say that this area will be the area that will cause the retest to happen. And so therefore your pending order for a long, which I am going to put in the market, is going to be this in here. So that's going to be around a 1 to 2.6 on the return front. And that's just literally utilizing what we did yesterday, same exact position we took yesterday. We did take a bit of a smaller portion of it. So I guess sticking to that theme, we're looking at the breaker structure point that we would look at for a short, which would be in there, I think. Just to be sure, yeah. Oh, yes, definitely. Yeah. So that's where the breaker structure would be for a short. So what we can do is bring our TP down to there and go to our 1 minute time frame, and we can construct a much sort of tighter trade, if you like. So down there, just to iron out these wrinkles to give us a really good realistic view of what we would be looking at. And so this would probably end up being there. Stop loss would be about there. So we're looking at around a 1 to 2.5. That's what I would think we'd probably get out of the UK Brent long. So that one there listed as a long. Right, let's have a look at gold. So we didn't take any of our gold trades yesterday. None of them activated, and that is simply because we didn't actually ever come back down to our entry level. It has continued rallying since then with nice impulsive corrective waves. We can all see it's been very controlled, not really any sporadic or irrational market price action breakouts. We are coming up to an inflection point, which is this one in here. Not too far away from it at all now. We've got this fake out, this low of the move before the price action pullback, but I prefer this as my level of liquidity to use in my analysis. Now, if I did use that low, then we would probably see that price action is pulled away from that low now. Okay, so if I bring that zone down, we've now got price action pulling away, and we can see evidence of that. So it's not to say that this isn't utilized at all, but in my analysis, what's most established? Well, it's not that low, is it? It's not that one low, which, if I remember correctly, let's have a look at this. It's probably on a market rollover or something. So what we got? So we got a 1 a.m. 1 a.m. on Thursday, and that's basically the time. So it's 1 to 1:30 on Thursday in the morning. So it won't be fundamentally driven, but it could definitely be a spike from a market rollover. So I would be utilizing these two, having my zone up there. That's where I expect gold to go to. Now, is there a trading margin for there? I don't think so. If we look at a breaker structure point above that area, I mean, you possibly could actually, couldn't you? Let's have a look. What does it yield? So we got target up to the big point of liquidity. Stop. Do you know what, guys? That's actually not too bad. So this would be a trend continuation trade. We've had the break, close, and double retest. This is an anchor point as well, isn't it? So what does that make the most recent move? It's just more consolidation, isn't it, than anything. We've got this area down in here. That's a fat one, isn't it? Well, actually, no, not when you unstructure the charts, it's not. So you've got that point of liquidity in there. You've got this as a fake out, which didn't work out. So that would be a stop loss trade. So really what we want to see is this high being cleared before entry. So I actually do like this trade. I think the technical analysis supports it. Just in terms of what's going on this afternoon as well, just to confirm, we don't have anything of risk to gold this afternoon. The BOT for Japan isn't out until late this evening, so we don't have to worry about that one. Canada's inflation rate doesn't really affect gold too much, and that's where we are. So in terms of the risk profile for this one, it's relatively good. We don't really have too many major technical or fundamental risks at play. And so I think this would be quite a nice addition to the portfolio. So I'm going to put the entry a little bit further above the margin. So let's say 26.40.93 for your entries, I'm going to have the stop loss at 2637.33 at a 1 to 2.25 risk reward ratio, 0.25% on the trade as always, and that's going to be a long. All right, let's dig into some FX positions. Now, yesterday we only got as far as the AJ, I believe, possibly the Aussie NZD. I think it was the AJ. And the AJ trade, we didn't do anything with the Aussie CAD. And honestly, guys, I'm not going to do anything again. I hate this price action at the moment here. Not very nice at all. So inconsistent with such a mixture of bullish and bearish candlesticks. So I'm not really going to get involved in that. The Aussie yen, I'm only guessing because of the Japanese yen itself, but was really, really good. And we did end up getting a nice trade off on that one. Looking at the low, which is here, which is a nice inflection point. We have had relatively good bounce today. So we reached this area at around 9:15 this morning. Big bounce back to around 100.2. And that's not a small trade. I mean, that's around 50 pips, I think, of a bounce up from this area. So if we look at this, and I'm looking at bounce 1, bounce 2, we have formed a lower high here, but we've got a lot of indecision. There's a lot of indecision in my mind about what to do here, because we've formed a floor, that's without a shadow of a doubt, but we could definitely break it in conjunction with what we're seeing in the most recent move. We've had this bounce back. It's actually not led to much, but if we look at the previous clues, okay, so if we look at what's happened before, we will see that we've had a bounce before and it's come back. We've had another one and it's come back, and then it went up to the highs. Now, I'm not looking for that much of a TP. That's too optimistic for me in these current times. So what I'm going to do here is I'm actually going to look at something a little bit lower, a little bit more realistic for us, and that would be from this point in here. We've got this point, we've got that point, we've got this high, we've got this high, we've got that low, high, low, all the way through. So if I then zone across here and I encapsulate all of these areas of interest, I've now created a more realistic target profit for us to utilize today, which doesn't really involve too many more of the risks. If I look left to confirm, it confirms a lot for some, but it also leaves something here, doesn't it? And that is not, for me, a fake out. Is it? I don't think that's a fake out, because we've got this really nice big push down. It's consistent. We haven't bounced off of this level and then dipped our toes through it before retracing. So if we think about the nature of the money in the market here, this isn't a trap. This hasn't tried to trap anyone. This has just plain and simply moved through. Then we get what looks like a break, close, and a retest. Where at my zone at the moment, this doesn't break, close, and retest anything. So it's just retested some random area and continued from that point on to then form a really, really nice big high and after a really big bounce. So what I'm going to do here is I'm just going to make a small adjustment. I'm just going to bring that zone down here and create that low as the beginning of the price action pullback. So now that is the point. And then I'm going to go back. I'm going to review what we've done. So now, as we can all see here, by making that tiny little move and just checking, all I did there was I made an assessment without checking left first and foremost. Okay, so that's where we were before when my zone was up here, and I was thinking, yeah, that looks like a really good place for a target profit, a really nice area of liquidity. But actually, what I did is I just looked left. So all I did is now look left, just checked again. We've got this really nice low in here. Yeah, okay, it loses its interest as we go back further in time. It's still not completely unused. I mean, this is a used area, but it's not fantastic there. But in recent price action, this is what I want to be utilizing now. This low, this high, this low as well, which is the midpoint of what looks like an M reversal, and most recently, break, close, retest, and a secondary retest. So now this Aussie yen's trading margins for us are going to be between 100.1 and 99.6. So now we can go down to 1 minute time frame. We can find breaker structure level for the short, which is going to be there. We can find a breaker structure point for a long, which is going to be there. Really nicely, clearly laid out. These ones don't require any kind of thought whatsoever. They're just really clear. And then we can go back to the 15-minute time frame, and we can say to ourselves, fantastic, we've now completely built the Aussie yen ready for trading. So now what we're going to do is we're going to wait. You can wait to get the rejection from the lows up to the highs, or you can wait for the price action to pull back from this area up to the highs and then trade it to the lows. Now you can, as soon as either this area or this area is hit, you can pop the pending orders in. So the Aussie yen is going to be labeled as a blue split bias position. We are long and short, but we can't have any pending orders in here at the moment. It's just based on where the market's trading, because we haven't actually achieved either high. We're trading in the middle there at the moment. Okay, both really nice risk rewards on that one as well. Aussie NZD, let's have a look. Not bad. Bullish channel at the moment. Well established low, semi established high. It's not really that great. Trading on a median, on top of liquidity right now. Low down below. Is it a good enough trading margin? I'd say probably not. It's quite tight. We've got a big point of liquidity on top of there at the moment. It seems to have lost the interest of the institutions at this point. So it's probably a dud. I would say your immediate points are going to be this area in here, and then an area down below. But it's not going to be far below, guys. I mean, that is basically where the price line's trading right now, right? So you don't have much space to play around with in this Aussie NZD at all. And if we break free of it on either side of the market, we still don't have much of a margin to trade. So for me at the moment, using liquidity like this is not really going to work. If I was forced, I would then be looking at parallel channel. So then looking at the areas like this, for example, that I could utilize instead. Looking at this at the moment, it's quite nice. It's not perfectly established. Obviously, it's a little bit unorthodox. We just copy and paste this. Let's form ourselves a nice median. So let's break down that median, stick that in the middle there, build this chart up, and there we can see quite a nice median being formed as well, with most of the price action taking place in the middle of the trend, with these areas of consolidation and rejection from the upper and lower channel limits. So based on this information, even utilizing the trend analysis, there's not much we really can do with this Aussie yen, which doesn't make it a decent trading asset. And we're going to have to sit tight and give it a miss for the time being. Aussie dollar, let's check it out then. What's going on with this one? Really nice move. That was yesterday, wasn't it? Yeah, really nice move up yesterday. We've got this area in here. That's your median of the two margins that we've got available. Has been recently retested, but it has already had a bit of a bounce as well. It's not great for current trading opportunities. We've got another nice level up there. Is that still used? I would say so, yes. So that's margin 1, margin 2, and then of course we have margin 3. And margin 3 is a very nicely established low. It doesn't take any kind of analysis mindset at all on that one. So now we've got two trading margins in the Aussie dollar. Now these margins are definitely good enough. I would say the long is probably a little bit less likely than the short, but the short's breaker structure point is very clean. So let's say, for example, we utilize that as a breaker structure point in there. We've got this break close retest of that area. We've got rejections, rebounds and stuff, retest. So that seems like quite a decent level for a bearish breaker structure. For a bullish breaker structure, let's say if we wanted to trade the rejection from the lows, that's going to be at this area in here for the Aussie dollar, which is quite nice because now we have a really rock solid trading margin and we know exactly where we should be. So then from this point, we've now, just like the Aussie yen, really nicely and really efficiently built the chart today. So what we're going to be doing is waiting for a rejection from the lows to take a trade in there. We're not going to be going for the very high. We're going to be sticking to that theme of not wanting to be in the market exposed for too long. So we're going to play things a little bit safer. Now, if we go for a rejection trade and we look at the bounce back, we're still looking at being able to take trades within the realm of a 1 to 2.5 in this example. So that's quite nice. If we want to be utilizing the long and the shorts up here, it's a little bit of a different score. The breaker structure for the short is definitely more difficult to ascertain because of the consolidation that we had to the left. So what I'm going to say about this is instead of trying to force a trade out of it, I'm just going to turn away. I don't like the short from the high. It probably would work. It's not for sake of it not working, but there's just not clear enough setup for it. The long, however, is not bad. Look at this area in here. Look at this wick up and look at this wick down or this bar down. That there is a nice little pot of liquidity. Now, if we drag this level along here, we also have the retest before liquidity is achieved, followed up by another break close and retest prior to the rally taking place. So again, this makes perfect sense when we're trying to find those decent areas where the money is. So we go from cash rich to cash neutral to cash rich. And so then we can place our long above that area upon a break of structure. We can get the stop loss, which is probably going to be down. I would probably aim for a 1 to 2.4 just to give that a little bit more room to breathe in there. And we've got ourselves a couple of really nice trade ideas. The only thing about this one is we need to wait essentially for the Aussie dollar to come down to this point before we can take those longs. Actually, sorry, we don't because of this breaker structure point, which we've already got utilized. So I'll just put that one in there. Put this one in here. Stop loss is going to be about there. And we've got our short 1 to 2.53 as well. So this can be a pending order. And that's the only one that can be a pending order. So this is our pending order for the Aussie dollar at the moment. Then we wait for this point to be achieved. Once that point's achieved, pending order. Both of them can be placed in the market. So that one is also a split one. Right, how are we doing for time here, folks? 10 past 2. Alrighty, I'm gonna knock out a couple more, and then I'll let you get on your way, as you've probably got a fair few things now. And I'll include. Don't worry, I won't forget about putting the trades in the trade signals area as well, so you can access all of them. So CAD Swiss trading range at the moment, very consolatory form here. Not a huge fan of it. Yeah, not a huge fan of it. But I don't completely dislike it either. So let's have a look. Whoops. So that's our trading margins for the CAD Swiss. Now, you can discount this bar because this bar was liquidity being switched hands from the event this afternoon at the inflation data. So we can discount this bar. We can discount most of these bars. What I'm more interested in is what's happened previously. And this is actually quite well established. And the margin here, it's workable, isn't it? So actually, after building this up, I'm probably going to utilize this as well. Breaker structure point is going to be there for the short, which as it happens has been utilized for that news event as well. I'm not, however, going to put a long in the market yet. So what I'm going to do is we can use this as our short for a 1 to 2.72. Rejection from liquidity up here. Okay, not bad. Looks good. Let's just bring that down a touch. Let's bring that down a touch. And bring that down a touch as well. So yeah, around a 1 to 2.5. Maybe a little bit less. The long break of structure is going to be basically where the price line is currently. So let's say this area in here, that's going to be the long breaker structure. However, I'm not interested in taking a long until the market has traveled like that. Now, just before, I know we haven't got much time left, but can anyone tell me why? Why wouldn't I just be happy taking a long in the market soon if the breaker structure element's there and the margin's been built? Anybody got any reasons why? Yep, Nadia hit it straight on the head. Well done. Thinking like a true risk manager. That's exactly what I want to hear. Okay? manage the risk. What are the potentially risky parts to our position here? Well, the potentially risky part of the position is that we've just had inflation data out for the CAD. So this is then going to be all minefield territory. So by the time the market has come up and it's rejected this area and we're already in our short, we are then going to be out of the way of the inflation news. Okay, the dust has settled, the market's resumed its normal trading practice, which is going up to the top of liquidity, rejection, so on, so forth. And so then we can take a long here because the dust has already settled from the inflation data, okay? So manage that risk. So at the moment, the risk profile on this asset is high in terms of high risk potentially, right? Or medium to high, I would say. If there was a scale, it would be a 7 out of 10. And that is because of the data that's just been released about half an hour ago. So once the market comes up to here, it turns into a low risk profile because we do not have any high risk data for the CAD or the Swiss this afternoon and leading into tomorrow. And we also don't have much of it in terms of technical risk either. Now, if the market does decide to break free of the range, then don't trade it. Okay, we are only looking for the push and the liquidity and the rejection. I'm not interested in taking a long in the CAD Swiss. I just want to be trading the range. Okay, so that's going to be a split one as well. Trading opportunities on both sides of the market. As I said, though, only trade the long after trading the short. That looks like that. Okay. All right, so let's just have a little bit of a recap quickly then, guys, because I'm going to get out of here, get ready for my own US session in about 15 minutes. To confirm, we have a whole entire host of positions in the NAS 100 and the US 30 Dow Jones. Unfortunately, it looks like 2 of the bloody potential positions we had in the NAS are going to complete before we even had a chance to get in there, but that's fine. We'll see what this afternoon holds for US tech. In terms of the Dow Jones here as well, oh my God, yeah, look at that. That's literally both of our trade ideas. That's all 3. That's all 3 of our proposed trade ideas completed within the space of our stream. Which is, really bloody unfortunate, but there you go. It's just the nature of the markets. It happens. It's just one of those things. So, as I said, utilize the most recent levels of liquidity to get into the trades. I'm still going to be using these margins. They are just as important. In fact, guys, I would actually say that these margins are even more important now than they were a half an hour ago. Because when I placed these margins in the chart, I didn't utilize much of the previous price action. These were speculative areas, and look at their accuracy. Okay, I'm not blowing smoke up my own ass here. That's not what this is about. But look at the effectiveness of these areas now. So these have even more importance now than they did, which is great for our potential future performance this afternoon. Okay, established. Price action has proven it, so use them. NAS 100, US 30 Dow Jones, mixture of opportunities. We've also got UK Brent looking for the long breakout up here, breaker structure, big long up to 75.61. We've got the gold opportunity as well, looking for that breaker structure point in this area up to the major point of liquidity up at the highs there. We've got the Aussie yen for a mixture of different trading opportunities between these 2 trading margins. Aussie dollar, very much the same thing, multitude of trading opportunities between these points of liquidity. And finally, the CAD Swiss with some range continuation opportunities, only looking at the long after the short. All right. So I'm going to wrap things up there, everybody. I hope you all have a wonderful trading day today and it all goes well. Look forward to catching up with you after the US market as well. I'll try and call out anything that I see that triggers and so on and so forth like I usually do. But yeah, I've got nothing more to say apart from go get it, guys. So take care, good luck, trade safe, and I will see you then. Bye-bye.